I want that for all of you. Once you understand and start seeing this stuff, you can literally telegraph what these guys are going to do and project the market, and you look like a crystal ball guru. Okay? All right, good stuff. When a SPY candle at the appropriate time is extending the high or low for the session, what I just illustrated for you. When it is pulled back, the high or low is now formed. So when a SPY candle at between 1 and 4 a.m. or let's say at 3 o'clock spikes the high or low, let's say the high, and pulls back, you went from the initial high to where this candle came to rest, or the peak of the candle came to rest, the high point of the candle. Right? Spike candle. Boom. Like this. Spike straight out. Maybe has a wick on the top. You now have formed your high of the day. Right here. When it's pulled back off of here, pulls down, you now have your high. This pullback is this forming up. Remember, I learned to trade by the numbers. I didn't learn to trade on the chart. You guys have a major edge. The guy made me look at the board and told me, okay, like the numbers I illustrated for you, that's how I learned. And I got to tell you, it's frustrating as hell. This is easier. When they hit the number, like I showed you, the 6184, right? When they pull back to 6170, that's forming the 2 point on a 1, 2, 3 setup, right? And then when they spike back up and fail to take this out on another candle, that's how the setup is laid out. That's how it's starting to play out. It's simply this. When you have a number locked, let's say 6184 is the high for today. When they come near 6184 and fail to break it, that's your high retest candle or your high retest point that allows them to absorb those orders that are needed for them to pocket some cash. So when they come near that, when they come to 6178, 61 70 81, but they don't take it out, the near miss ensures that you're at the right point of the chart for the short. The near miss is part of the signal system for you to understand the signal's coming. The near miss is part of that. Now if they take 6184 and breach it to 6187, now you have to understand, where do they close? That's the next question. All right? If they come in here, this is where people say, oh, what about this, breaking this? Here. If they come up here to 61, I'm going to just use lines. 6184, and then they pull back, and they start on the second pass, and the second pass goes above and hits 6188. That's a mild 4-pip extension of the high. Add the spread. It's about a 8 or 9 pip extension of the high. Now the next question you have to ask yourself, did they close back below after they tapped out the stops? If the answer is they closed below after tapping out the stops, the high at 6184 is still valid. The trade is good. Because the 6188 tap was to pick up the orders that they couldn't get that were sitting up there. It might be like 6190 because it's a round number. People trade that. You might see it go from 84 to 90. When they open the spread, they grab the orders at 91, 90, 91, 88, like that. Understanding that is added confirmation to your trade when they make the near miss. That's the high retest candle, low retest candle. It also forms the second leg of the formation. This structure is a 30 to 90 minute ordeal. How do I mean 30 to 90 minutes? The clock starts 30 to 90 minutes when the first high is formed on the vector candle to the high. Okay, now, when they spike it to the outside, pull back, and they tap above and stay up there, if they close above the 6188, the candle turns green and closes above, that's not the high anymore, is it? 6184 is not the high, 6188 is the high. You need to wait and see what happens. Understand? Wait and hang around and see if the next candle issues a railroad track and comes back below the previous 6184. Okay, you guys with me? You okay? The board's scrolling a little fast for me. Just want to make sure you're okay. Okay, good. Understanding how they handle the high and low is the whole business. Remember I told you the high and low is the whole business. Understanding how they handle it is going to help you get in the right direction. Okay, the 30 to 90 minute time frame, very important here. The 30 to 90 minutes starts when the high 6184 is set. When 6184 is the high of the day, the clock starts here. This time horizon is 30 to 90 minutes. Why? Because they got to go down, back up, near miss, and turn over. This structure takes 30 to 90 minutes, but up to 2 hours can be seen for this to develop. Okay, now, from the second leg, time horizon, from the second leg time horizon is 2 hours from entry. 2 hours right here. Okay, if you are not in substantial profit and it's chopping around and not moving, stop yourself out and get out of there. Excuse me. Hope I didn't cough in your ears too bad. You know what? I need a sip of Diet Coke. Hold on. Okay, back. All right, so listen. You enter the trade right here on the pullback off of 84, around 78, 75 with the spread, right? You're in. You start the clock. You have a 2 hour time horizon where if they pull away and go into consolidation like this and they don't move the trade, something's wrong. Ed, you asked me, I don't know the answer, man. Something's wrong, right? You start the clock on your entry second leg, something's wrong. The contracts aren't straddled in the way that they needed. So you got to scratch yourself out. Ed, I mean enough room to move your stop to break even. You should be up 25, 30 pips, 35 pips. And if it's chopping around, if the trade doesn't go in your favor right away, something's wrong, right? You'll get used to it and you'll see, but I promise you, you'll get your plus 50 so quick you'll think something's wrong with the platform. If you're the kind of guy that's been nursing trades and taking multiple orders and hanging around, and then you lift your stop and you sit there for 3 days, you're going to freak out when you hit your take profit in 45 minutes. You're going to be like, man, that was really easy. What the hell just happened? Nice to see you, Arnie. I didn't see you earlier. Understand what I'm saying? You're going to get a shift of the zone, which, remember when you've been in a trade before and they shift against you and you're down and you're sitting there? When they shift the zone, you're going to be in profit. And that's what the traders don't understand when I explain to you. You're going to be in profit so fast, like last night, after they railroad tracked to the low, they shifted right away from that area. Why? They had so much money trapped low, they got to get the hell out of there. They issued 3 vectors back into the range. You were out in 15 to 30 minutes. Understand? It's fast. When you grab the trade, it's so quick, you're going to think something's wrong with your computer or something. You're like, holy crap, did I just book 50 pips in 15 minutes? Then what's going to happen is you're going to feel like it was too easy, and then you're going to hang around and make stupid trades and give it all back. That's what's going to happen, I promise you guys. Don't do that, I'm telling you. If you book a profit on an easy setup in 2 candles, you see the railroad tracks to the low and you take it, and in 2 candles, 30 minutes, you're out plus 50. Don't hang around and keep guessing and chasing it. That's what's going to happen. All right, look, I just realized I went a little over. We need a 7-minute bathroom break. We got about another 45 minutes, then Carl will be in. 30, 45 minutes, depending on how I go, okay? Let's do a 7 minute, and I'll keep talking about these vectors in this setup. This stuff's important, man. This is, listen, identifying the pattern, identifying how they handle it, and identifying where you're supposed to take the entry and what it's supposed to look like is the whole business. Once you master this stuff, you own these guys, man. So let's do a 7. We'll be right back. So, all right, so we're trying to understand how the high or low is formed, right? So they hit the number, they pull back 15 to 20 pips off of that number, go near the level, and fail to break it. That's your setup. Okay, same thing for the downside. They'll spike to the low, pull back 15 to 20 pips. That forms the hump in the middle of the W or the M, right? The pullback right here on the board forms that hump, which if you understand how the 1, 2, 3 trade set up, that's what they're doing. That's how they're working it, okay? Important stuff to understand. The retest candle is when they come near it to pick up those orders, okay? We call that a high test, high retest, or low retest. I have some pictures for it. Let's see. All right, we covered that. Okay, now, with that in mind, the following candlestick patterns need to occur at or near the high and low of the day. What happened? The clock's still in the way? Okay, yeah, I think you asked me about the clock. All right, here, let's go here. If the structure takes 30 to 90 minutes to build, but up to 2 hours, if you're on the first leg and the trade doesn't move into profit in 2 hours, you scratch yourself out. If the second leg presents 30 to 90 minutes in and you already started the clock, restart the clock on the second leg, and the time window is 2 hours. Okay, if that trade does not shift away from your entry and go into profit, if it's teetering back around between +1, -5, +7, and doesn't move nicely, scratch yourself out. All right, one more time. Last time, Whitney, pay attention. Roberto, okay. If the first leg, how about this? How about a pitcher's worth 25 cents? I'll draw it for you. They spike up and pull back. You took the entry right here. No problem. Okay, you start your clock, 30 to 90 minutes. You expect them to come in and do something else. Forget about the 30, it's 90 minutes. Unless it's railroad tracks. They pull back, they hang around. This goes on for an hour and a half, which is equivalent to 90 minutes. The trade just sits there and doesn't go into profit. Scratch yourself out of the trade and take what is given at that moment in time. There is no chart, Floyd. I'm drawing it. Remember, they test you with time and patience, which retail traders have neither. They're trying to juggle trading between a job, and they don't have any patience. They want it to go into profit right away. Thanks, Abe. Okay, so now, if an hour and a half elapses and doesn't do anything, 2 hours maximum. You're going to know when you start trading these. I promise. The example I give you is the last 2 nights. They shifted. They got the hell out of there so fast. The trades were up big in the blink of an eye. That's how your trades are supposed to go. You're not supposed to nurse a trade for 3 or 4 days. That's not the business. You're supposed to be up in profit in a bar or two. When you grab the right price points, you'll be in profit quick, man. You're not going to sit there going, oh, man, it's consolidating. I don't know if I'm in the right spot. You're going to learn. You're going to see what I'm talking about. I promise. I promise. I promise. It's there. All right, so look. Hour and a half, 2 hours. Yes, if you're losing, you scratch yourself out because I don't want you to throw any more pips away than necessary. Okay, now, if your clock's about to expire and they make a break back towards the high, but fail to break the high and form out the second leg of the M, The clock starts over from here. You give it a 2-hour time horizon. I promise you, if you got second leg, you'll be in profit in 30 minutes. Isn't that like Pizza Hut, 30 minutes or it's free? Right, Dave just wrote, shift candles, 20 pips on average, green. The trade goes green. They shifted away 20 to 30 pips off of the high or low quickly into your favor. Gloria, you know the answer to that. If the second leg breaks the first leg, pay attention. You've heard this 4 times. You know the answer to this. If the second leg breaks the first leg, now it comes down to this. First of all, you have your stop loss in place. If your stop has not been triggered, do not let the market prove you wrong. You are smarter than a fixed position on a chart. The answer is this. How do market makers handle the high and low is the whole business. If they close above and stay above, you're probably going to get stopped out, so take it at 10 pips instead of 20 pips. If they open on the next candle and railroad track back inside the range below the previous high, your trade is still valid. I don't know if I can make that any more clearer. Good, Gloria? It's how they handle the high and low. If they cut the high in an aggressive move, or cut the low in an aggressive move with a big fat candle, you're going to get stopped out. Why would you sit there and wait to get stopped out? Why not take a minor loss and recover on the next strike zone? Gloria, if they close above 3 pips, you got to wait and see what the next move is. 3 pips is not going to be much, obviously. 3 pips plus the spread, you're down 5. If you're down 5, you got to wait and see if they railroad track back inside the range below the previous number, or back inside the range above the previous number if you're trading off the W side. It's how they handle the high and low to pick up the orders that determines if the trade is still validated. Okay, good stuff. Okay. The certain formations that appear at the right time and distance from the blue box, the vectors, gives you the highest probability setups. Let's look at what these candles should look like. Okay, this is exactly the way I've illustrated it for you. Here's what happens. Where's my little ballpoint? Okay. They vector to the low. They issue a hammer outside pin structure on the mayonnaise. They consolidate for 1, 2, 3, 4. How long is that? 1 hour. They consolidate off the low for 1 hour. They then spike back towards the low, but fail to take out the LOD. And then they immediately get out of that area. They consolidate. Your entry is here on the confirmed railroad track. The trade goes into profit, plus or minus a few pips right off the bat, and then in 45 minutes you either hit your profit or you're well on your way. Stop loss goes right here below the low. I'll talk about where the stop loss placement is tomorrow, probably. Okay? This candle that comes back, it's like almost testing the low, right? You know, we talk about support and resistance in the business, and I can tell you the strongest support point is the low of the day. The dealer hits the number and says, no mas. Now, you like that for you Spanish guys out there. The dealer says, no more. That's the price. I can't go another pip lower, because I might let some money out. That is why you have a variation of highs and lows from dealer to dealer. Because that dealer that didn't go another pip below, but another dealer went 2 or 3 more pips below, his stop orders or certain amount of orders, maybe he was going to pick up more longs. He didn't want to activate those because he knew he was going up. So he stops right there. He's got everything he needs today, no more. He comes back and he comes near it again. So isn't it safe to say that this is the strongest support there is and the high of the day is the strongest resistance there is? Because the dealer doesn't want any more. Right? There's your entry. Bam. Beautiful setup. Okay. The high test candle. You have your vectors. Here, look, extend the box out. He moved a little later. There's your 3 pushes at the high. He cuts the high in 3 moves. There's the price point. That's resistance for today, right? I'm going to start doing that. The dealer hits 61.92 and he says no mas. He pulls back quickly for 30 minutes. He works it, right? Hangs around, validates the orders. He pushes back up. Understand this was green like this at one time, right? He then comes right back below and closes down. The high is still intact. He then shifts the zone away from this structure and traps everybody that got jammed up in here, consolidates, accumulates more contracts on this anticipation. He has built enough of a float in here to be profitable for the day, and then in one candle, he's sorry about your luck, but I need to make some money here. He shifts the zone away from higher level long holders and makes them cry. You will almost be out. By the time it hits here, you should have your plus 50. How do you know, Steve? How could you measure? Because this range is 60 pips, and if he's above that and comes below it, that's way more than 50 pips. You're out. Spread and all. Okay? I hope you see the beauty and the simplicity of all this. It's crazy. It is. It's like artwork. Understanding how the dealer traps the traders is essentially how he handles the high and low, because that's where the traps are, is the whole business. Okay, let me go back and clean it off and comes back, because you're asking where the entry is on this. The entry is anywhere in here. You have vector to the high. There's other reasons here. Maybe the tracer's not on here. This is your M formation, my friend. Here or here on the inverted hammer close below. TDI should already be gone because the closes are averaging lower. You might have a shark fin. Michael, I'm sorry to hear that, but welcome to the family, brother. I've been trading 10 years and never saw this, Michael said. Now that you know it, you can't unknow it or unsee it. I wish you well, my friend. All right, here it is again, a blow-up of it. This is a hammer, quasi-hammer, hammer, right? We're talking about the candlestick patterns. A hammer is better when there's less of a wick on top. But understand that after you have 3 vectors to the high and you got a group of hammers, notice the pins are to the top side. Remember I told you the area he's trying to work is where he throws the pins. So if you identify that he's throwing the pins to the top side after he cut the high, man, you got it. He's got everybody else, and you got what he's doing. Yes, Susan, if it happens earlier than between 1 and 4, it's still okay. But understand that if you see the first hit in the Asian session, chances are at 3:30 in the morning he's going to come back in the second session and hit it again. That gives you a very solid confirmed double top high or double bottom low, M or W. That's a better trade than trying to grab it in the Asian session because it doesn't move much during that time historically. Now, I know there was a nuclear meltdown, a lot of stuff going on. Tsunami almost broke the nuclear shell reactor. I understand all that, and you get these anomalies in the chart where they move. But as a whole, the pairs move mostly during London and the U.S. session. I've met a lot of people that wake up 4 a.m. and trade 4 a.m. to noon. If they miss the move, they miss the move. Thank you, John. I'm glad it's making sense to you, man. When this dealer switches the pins to the top side, He's going to open the spread up in here too. That's your clue also. All right? Good stuff. Pins to the bottom side. If he's working the low, the pins are going to come in at the bottom. The pins are going to come in at the bottom out of nowhere. Right? Typical shoulder, head, shoulder. Level 3 behavior. He dropped down. He spikes the low in an aggressive move. What happens with those big spike candles, maybe they break them up on the 5-minute chart into 3 pieces. If you're trading that garbage, stop. Here, let me clean up my drawing. Back to here. He'll break this into 3 pieces on a 5-minute chart, right? 5, 10, 15 minutes. You're concerned about this stuff right in here, how he ends. Okay, now look. The initial low was set, right? This was the low of the day on the spike down after he came out of the Asian range. He spiked it crazy and pulled back. Okay? He comes back. Gloria, pay attention. He comes back and runs a pin all the way down there and then closes all the way up here. He's not satisfied with the work that he's done. He needs more money. He does it again. He goes all the way down and comes all the way back up above the previous low. Understand? Not allowing traders to book a profit. The spread gets opened up in here. Now he comes back for the second pass, and it's lights out when he shifts the zone right here. In 3 bars, 45 minutes, and takes back all of this money in 45 minutes. This went on for hours. Do you understand that? When he shifts the zone in 3 bars, he just beat the crap out of everybody that's been trading for the last 15 hours. Yes, it's a variation on a triple bottom or triple top. Yes. The center happens to be the head is longer than the 2 shoulder pins. But yes, that's what it is. Notice in here you got vector to the low, 3, 1, 2, 3. This stuff makes traders go, oh, look at that, it's going down, sell. I had a friend, I think he's in here, from California, Dave. I won't say his last name, I don't want you to bother him. Used to fall for this crap all the time. He was excitable guy, I love him. I can tell you he doesn't fall for it anymore, and he consistently books an exorbitant amount of pips. Almost as much as a Subio. Dave, if you're in here, buddy, I didn't see you. Thought I saw you earlier, yesterday, I don't know. Happy to have you. He used to scream on the spikes and get excited that we're missing Australia and it's going. Hurry up, it's going straight up, we're missing it. That behavior is exactly what they're trying to create in your head by showing you that aggressive move. All right, same thing. Railroad track spike to the outside. Right? They come in 1, 2, 3 to the low. They hit it. They get the hell out of there as quick as they can by 1 shift away. This structure forms out, right, the W. Don't you see it now? It's okay to take the trade in here. When they come back and fail to take it out, they're trapping. Snatch it away. Sorry about your luck today. Evening star formation. This is one of my favorite candles, and I'll tell you why. They go, oh, it's indecision. Look right here, look. You know what that is? That's an extra 15 minutes to take your money away by the market maker. Sorry, but that's what it is. That's the truth. When he hangs around right near the high, think about the railroad tracks. 15 minutes up, 15 minutes down. Right? That's a 30-minute anomaly. He goes, we're high, let's hang around for a few minutes. So he adds 15 minutes to the structure right here, up and back down. He adds 15 minutes to the structure in the middle, and he induces traders to take the longs. There's no indecision by the market maker. He knows exactly where he's going. They call that indecision, oh, the bulls and the bears are fighting it out. No, they're not. They're losing. The market maker's winning by hanging around for 15 more minutes and taking your money. Same thing for the Morningstar. Same stuff. That's an extra 15 minutes in there of the structure for him to take the money. That's all that is, nothing else. Don't forget it. Railroad tracks. You guys keep asking me, how big do they have to be? Australian, they're going to be 10, 15 pips. GJ, they might be 50 pips apiece. 50 pips straight down to 50 pips back up. You'll know the structure when you see it. You got to get some time in front of the screen and recognize it. When the railroad tracks come in at the high of the day or the low of the day, that's what you're concerned about. If they come out and break the pattern, go look at last night's Euro CHF, GBP CHF. That's what they did. The railroad tracks came right out of the box and set the low of the day. They repeated the level from yesterday. That's what we're talking about here. Doesn't matter the length. It's the behavior. Don't get caught up in how big the railroad tracks have to be. I don't understand. I mean, don't trade two doji crosses and say, Steve, they look like railroad tracks. That's not what I'm telling you. I'm telling you is they're going to make vector to the bottom, and they're going to come right back out. Different lengths. It's the behavior. Watch the development of those, and you will understand. Okay? The wick sizes are irrelevant because the wick sets the high of the day and pulls away from it. It's the behavior with the pattern. That's what I mean, all right? What do I mean when I say railroad tracks? It's thought that this looks like a set of railroad ties, I guess, and then they lay rails on this, right? That's where railroad tracks comes from. I didn't make it up. It's not my term. Let me find here. Couldn't you picture like all these coming down, then you would lay your rails right here and you drive your little pins right there, your little plates if you were a railroad worker? Not that I ever was. See what I'm saying? That's where railroad tracks comes in. They look like railroad tracks. Or these could be the rails. You just now got that, Lou? After all this time together? That's where it came from. All right, man. Have some imagination. Okay, look. The doji forming the high of the day or the low of the day is held for an additional 15 minutes. It allows the dealer to flash across or grab a few more contracts. That's what's actually going on. The evening or morning star holds the level and opens the spread, which induces traders to take the continuation. Hammers, inverted hammers, used to activate the pending and trigger the stops. Okay, I'm giving you the real definitions of these candles, by the way. If you don't want to know, I'll go slow. Spike tops, spike bottoms, it's to trap and create drawdown. Immediate drawdown. The railroad tracks, get in, grab your money, create immediate drawdown and panic and get the hell out of there. That's what they're for. Stop thinking like a retail trader. Think like a market maker. Why would I add an extra 15 minutes at the top of the formation if it's a doji? I want to pick up some cash. I mean, that's what I'm in the business to do. Why would I throw a hammer, inverted or regular? Why would I spike a hammer to the top? I want to pick up those pending orders on the other side. I want to trigger the stops of the people that got it right. I don't want them to make money. Same thing for a spike top or spike bottom. I got to trap the traders short, snatch the market away, and put them in the drawdown and scare the crap out of them. Make them start doing stupid stuff so I can end up with their account. After all, that's my job. I get bonused on that. Understand? Good stuff, good stuff. All right. Is anyone still writing this? I'm going to move on. Carl, you're up in about 10 minutes if you can hear me, buddy. Maybe a little less. Okay, got it. Thank you, Susan. Somebody got it. Alan, thank you. Sam. What is DD? It's not what you think it is. It means drawdown. Shame on you, John. I read your mind. All right. Market makers induce traders to take the wrong directional move by sharp, aggressive price changes at or near the high and low of the day. I drew it for you, right? The patterns will almost always reveal a reversal unless they time out. If the pattern times out over 2 hours, you scratch. Why would the pattern, that behavior, fail? I don't know. Somebody loves me. Thank you. My wife's not going to be happy. Because the trap volume does not exceed the total value they were seeking So you can expect an extended stop hunt. Oh, it's Karina. Hey. You can expect an extended stop hunt. How far? 25 to 50 pips to the next level. Okay? Peter, it's an art form. You got to look at it. So if the pattern fails, it times out. 2 hours and it doesn't show a profit. I could tell you that if you were trying to grab the reversal on Monday's tank when it dropped, it stalled at the U.S. session and went into consolidation coming into the session changeover. If you tried to trade that back, which you're not supposed to, by the way, count the bars from where the entry appeared and you should have timed out. Nick, I'm going to give you every single pair and every value. Hang in there. I didn't know it was you, Karina. Thank you, Bruno. I like to think it's good stuff. It's making a lot of people wealthy. When the trap volume is not met, the market maker has 2 moves left. Think about this. You're in the trade. It's not going your way. 2 hours is about to go off on the alarm. What does he have left? Hit the stops and rise. Hit the stops and fall. Right? That's one move. If you're in a short, hit the stops and rise to the next higher level and then drop. Or, remember that Australian chart a few charts back that he extended the high for a longer period of time and hit it again? He can hold the level and work the crosses and come back to Australian later. He doesn't give a shit that you're in that trade. He moves it when he feels like moving it, when the money's built up for him. Not because you got to go to bed or it's time for you to get your clothes on and go to work. He don't care about that. He cares about money. So if he holds the level for an extended amount of time, it doesn't mean the trade's necessarily bad. But I want you to take it off. Why give him the opportunity? The criteria has broken down. If you get stopped out, you wait 2 hours. 3 candles vector, 45 minutes. First leg pull back, 30 minutes. Second leg comes in, 15 to 30 minutes. 2 hours. Look for the entry. Next level settles in. If you get stopped out, come back and evaluate the chart in about 90 minutes and then look for your entry about 2 hours in. The time element. He's testing your patience with time. Something that no trader has because you got to go to work, your kids are screaming, you're tired, you got to get up early tomorrow, you got to take a nap, whatever. The time element is something that very few people realize and is overlooked all the time. He does it to bust your chops, man. Okay? The moves are carried out over a time interval and induce traders to take positions even when they're not ready because you feel like you've got to get something going. Forces you to make up stuff. Okay, if you're caught by the market maker by this move, wait for the next rise or fall. Minimum of 2 hours. Now, here's a very important note. If you took the move in London and he snagged you, and it's coming up on the U.S. session, the red box is starting to show up, wait for the changeover. Okay? If he snagged you and it's the end of the day, get your money back in London. Don't jump on something to try to get back at him. You're not going to win and beat him by trying to get back at him. You're not here to get even, you're here to get paid. Okay? You're in a trade, you get stopped out. Next level strike zone, 25 to 50 pips higher. The pattern appears, minimum 2 hours. If you're close to the session changeover, hold and wait. Wait for the session changeover. When the session changeover appears, look for a fresh set of signals. W formation reversal, M formation reversal back into the range. Breakaway trade or straightaway trade continuation if you're at level 2. Take it. You'll make your money back. If you control your loss, you'll end the day net positive. If you don't let the loss turn into a big, ridiculous move, you'll end net positive. Am I talking too fast? Someone says, Pop a Diet Coke. I don't know. I'm jacked up, man. Having a good time. Hope you guys are enjoying this. Okay.